There's a lot of talk out there on soft landings in the Fed, so the question is, will real estate have a soft landing in 2023, or will we experience a market crash? Real estate prices, like all goods for sales, are a function of supply and demand. However, the government and the Fed does try to insert themselves from time to time to manipulate that equation, whether it be from terms like rent control or even manipulating interest rates like the Fed is doing right now. Supply in this country was down 5.5 million homes nationally, which is why you see prices increasing over the last couple of years. Pricing is simply a matter of supply and demand. And so what the Fed decided to do is, instead of go after the supply challenge in this country, they went after the demand side of the equation. And so they started raising interest rates. Rates were in the 2s and 3s, and they increased them as high as into the 7% range, which is why we've seen a demand decrease of over 32%, both locally and nationally. So the demand side of the equation has been fixed, at least temporarily, with a 32% lower demand. However, the big challenge is that supply has decreased 27% as well. Some of that is simply just this mortgage rate lockdown effect, where a lot of would-be sellers are sitting on the sideline with rates in the 2s or 3s and just simply not motivated enough to sell their home in this marketplace. The other side of the supply equation is new construction. And the biggest concern there is a lot of builders are deciding to sit out or decrease their production, which is going to be a big challenge as demand increases again with lower interest rates. We may simply not have enough supply once again when that happens. So the Fed is now faced with the question, what do they do next? And I think they've got 3 different options. Option number 1 is they can continue doing what they have been doing and increasing interest rates. I think that poses 2 challenges. I think under that scenario, you have more and more people renting versus buying. So that kind of quote unquote renter nation type status. And the reason for that is, as we have higher interest rates, fewer people will be able to afford a home, which would cause more investors to purchase in this market. The second thing, and I think this is the biggest challenge for the nation, is if we continue to raise rates, I think that moves us closer to a currency collapse, as we simply can't afford the debt load and the interest rates that we're having to charge ourselves on the debt that we have borrowed. Number 2 is they could pivot and start to decrease rates. We're heading into a recession, or we're already in a recession depending on who you talk to. And so what they could do is start to decrease rates and increase the demand. The challenge is that they've also decreased the supply already in this country, and the supply was already a 5.5 million home deficit. So if we do that too quickly, we're likely to experience what we've seen over the last couple of years with double-digit price appreciation again. The third option is that we could keep rates flat. And the theory here is that we're kicking the supply challenge down the road, and that builders would magically produce enough homes in the future to match that supply and demand imbalance that we currently have. This could create the soft landing that everybody is hoping for. As rates start to flatten out, that would also start to decrease 30-year and 15-year mortgage rates. And what we've seen historically, at least last year, as rates hit the 5.5% mark, we still saw a lot of buyers in the marketplace and a very strong seller's market. And then based on our own polls, the people that aren't planning on buying a home this year, most people said that they would re-enter the marketplace at 4.5%. So as we see 4.5% interest rates, expect to see a very strong seller's market once again, which is also historically the average interest rate that we've had in this country over the last 20 years. My prediction is that we're going to see a relatively soft landing as interest rates start to flatten out in 2023. I think that period will be somewhere between 12 to 24 months, and expect to see strong price appreciation occur again once interest rates decrease in that 5.5 to 4.5% range. Expect to see double-digit appreciation both locally and nationally for homes. So if you're looking to buy or sell in 2023, send us an email at moving@mattcurtisrealestate.com. Again, moving@mattcurtisrealestate.com.